Hi, I'm Chris Reid, Managing Director and CEO of Australian ASX 300 company, Neometals.
Chris, good to see you. We saw you live in London recently, and you're back in Oz, doing the rounds, talking to shareholders, updating them on the latest news, Barrambie Titanium Project PFS. What do we need to know?
Correct. Well, Barrambie, it's the world's second highest grade hard rock titanium deposit. The titanium market is fantastic. Very, very strong demand, constrained supply. Barrambie is a development-ready asset. We're going to look to develop that very similarly that we did with Mount Marion. So to bring in partners, contractors to do it in a very capital-light way, underpinned by a fantastic offtake agreement, offtake term sheet at this point.
But tell me a little bit about that, okay? Because I'm interested in the economics of this, because you'll have learned a few lessons from Mount Marion. It was hugely successful, but there's always lessons to learn and things to sort of, take forward here. So in terms of this deal with this Chinese off-taker, how have you structured that, and how have you made sure you're not kind of giving away all of the upside further down the line?
Yeah, so the offtake term sheet is for a 5-year. We've got a 13-year mine life. You got to get these things into production, right? So we could do the full integrated operation that's more than $400 million. What we've been able to negotiate is an offtake term sheet that allows us to develop Barrambie as a concentrate-only operation. So we're looking for years 2 to 5 to be concentrate only. In the first year, we're looking to start up as a direct shipping or operation. And so with all of these things, you can be 100% assured of spending money, and the question really becomes the revenue. And that's got to be underpinned for us. 1, take or pay. 2, market link pricing. 3, floor prices that sort of have margin insulation for us and have guaranteed returns. And then we can look to confidently develop the asset. I mean, we bought Mount Marion in 2009. We had a mine to port solution on a contract basis with Mineral Resources. They came in for equity in the project, and ultimately it was that offtake agreement with Ganfeng that allowed us to develop Mount Marion. That was their story. For Barrambie, same sort of thing. We've got the project to where it is development ready. What we want to do is a feasibility study on putting the concentrator. The market is so tight that the Chinese want to buy direct shipping ore, which is an option for us. And so, what we've done now, differently to Mount Marion, is offtake, and then we'll do the mine to port solution. At Mount Marion, we did the mine to port solution and then the offtake.
Right. Okay. So you're not giving away all of the upside, but you're keeping or retaining the option of maybe containing a relationship with, was it Zhujing? Okay, I'm not quite sure.
Yeah, so look, we have the option, both of us, as Zhujing, but that's okay. So we have the option of extending that, right? Or we can take back our offtake in years 5 onwards and downstream process. But, you have to get these things into production, making cash. Once you've got cash, options line up. One of the things about Barrambie is actually 2 ore bodies in one. There's a vanadium deposit and a titanium deposit. Once we mine the titanium deposit, process that, we stockpile the vanadium ore. So you retain that optionality in the future to develop a second operation.
Right. Okay. You've obviously got this kind of relatively low capex CMB plant. Okay. There is some money going to need to be raised, and you want me to kind of focus on the revenue, I guess, margins as well, for people not to look too closely at the kind of capex requirement here, albeit low. But they are going to look at it. So how are you intending to deal with that?
So the $215 million, what we're looking to do is break that into 2 stages. So the first one is the direct shipping ore. That's just under $80 million to get that up and running. So how you approach that, it's $80 million if you do it all yourself. What we want to do is bring in contract miners. We want to bring in contract crushing and screening, which is a very, stock standard service offered by a lot. We've got an early contractor engagement with NRW and Preparo that do this for other customers. We'll also have contract haulage. So we expect to have our contractors take on a lot of that. In terms of the CMB or the beneficiation plant later on, after the PFS, and now we're starting the feasibility study. Primero will run that, and at the end of that feasibility study, they'll either give us an EPCM contract to build it, or they'll give us a build, own, operate and transfer contract.
Right. Okay. Understood. Understood. So you're looking to kind of manage that kind of the cash flow requirement. So the cash requirement, and then take advantage of the cash flows when they do flow. But here's the thing was slightly different from when you did Mount Marion is you're a much different company. You know, you had a lot of early stage green projects in terms of recycling, in terms of, Vanadium, the European focused projects, which are going to need, feeding too. So can you just again remind us about how you're going to treat these projects separately or in combination, and how does Barrambie give you optionality into when it does kind of start cash flowing meaningfully for you?
Yeah. So look, in terms of Barrambie and the project, so capital cost 215, you can push a lot of that onto the contractors in the early years. In terms of the cash flow it make over the first 5 years of that offtake agreement, you'll average more than 100 million in cash flow per annum. So a pretty quick payback, right? And you've got the optionality to downstream process and make higher margins. In terms of where Barrambie fits, obviously we've developed 3 processing technologies, over our journey. So Eli for lithium chemicals, the vanadium recovery, and the battery recycling. So all of those are producing battery materials at the bottom end of the cost curve at the lowest carbon footprint. And Barrambie's an upstream mining asset. So look, Barrambie, we're reviewing our strategic options. For that, we'll have a look at, anything from trade sales, demergers, private equity coming in. But essentially, what we want to do is to have that, funding itself, much like we've approached the vanadium recovery project, right? So we own the technology. Do we need to own 100% of that project? No. At the moment, we own 72.5% of that project, and we're deep into a 400 million euro financing. So 240 million euro debt, very, very advanced, looking at having binding banking syndicate next quarter. And we're making very, very good headways on the 160 million equity. So that's not coming from the head company, that's going down at the project level. We own the technology, we'll get a royalty out of that, and we're confident that we will retain a significant stake without having to put our hand in our pocket, much like we did at Mount Marion.
Okay, and here's the other thing that happened at Mount Marion, which was dividends started getting paid as a result of the money you generated there. Obviously, this feels like a much bigger project, much more substantive project, but you also have some, bigger demands across the group, as it were. So, can we expect more dividends at some point?
Well, the board management and the founders remain the largest shareholders in the company. I think at the appropriate time, we have demonstrated our willingness to return, value to the shareholders. Now, where we haven't been able to do that with cash, we've returned Widgie Nickel, which was our nickel business. All it had to do was, essentially fund 2 years feasibility study to look to go into production. And they've done a fantastic job at that. We resourced it well. It's got a fantastic board and management team. They were well funded. They are executing on that plan, and they've enhanced the value that we distributed to the Neometals shareholders. I mean, that was a $26 million distribution a couple of years ago. For Barrambie, we've invested more than $40 million in Barrambie. It's the most advanced hard rock titanium deposit in the world. It can be in production in a couple of years. In a meaningful way, it'll produce 4% of the world's titanium supply. And, our offtake counterparty is tier one. We would be selling to China's largest titanium slag producer, who is the primary feedstock provider for China's largest titanium metal producer, Baotai.
But how does that work in terms of, okay, we'll come back to the deal that we're talking about today. Commodity prices can fluctuate. How does this term sheet work, or how will this term sheet, convert into reality for you? Is it like fixed pricing, or is it as a percentage of the, 30-day VWAP? Or how do you guarantee success?
So let's go to the market at a very, very high level, right? So the main uses of titanium is paint, paper, pigment, titanium metal. some people say it's not sexy. Demand grows at 3%. There's no speculators in it. Everyone uses it value in use. To me, that is a fantastic business that you can invest in confidently in the long term, right? It doesn't have the volatility. For the last 5 years, it's just had a very gentle trajectory. The pricing of the titanium feedstocks is really set by Rio Tinto with their UGS product, which is made out of the only hard rock deposit higher grade than Barrambie up in Quebec. They make a gravity concentrate, same as we plan to do, but they've got the benefit of cheap hydropower where they smelt it and then they upgrade the slag, and that pretty much is the reference price that all other products and mineral sands are priced off. The world's running out of mineral sands. Over the next couple of years, supply growth is 1% v demand of 3%. There's a fact that you've got demand in terms of China switching from sulfate quality to chloride quality. There's not enough high quality chloride feedstocks in the world. The demand is generally linked to GDP, but the prices have been on an ascent for 5 years, right? It's counterintuitive, but when you overlay that the world's running out of the high quality feedstocks and dominated by upgraded primary materials like we produce, it makes sense. So in terms of the price that we're looking at with Jushing in the offtake term sheet, it's linked to Australian ilmenite prices, right? We get a percentage of the Australian ilmenite price, but it's subject to a US dollar per wet metric ton floor price, and that is able to be indexed upwards only, linked to CPI. So all of the numbers we put out, those financial metrics, are underpinned by an offtake for the first 5 years at floor price. So we retain upside in a market that's forecast to go into deficit very, very heavily in 25, 26.
So in terms of an investment, would you say this is better than Mount Marion? Obviously, I think you've invested you talk about in excess of $40 million. In terms of return on capital invested, it's definitely up there, isn't it?
Look, it's a good IRR. We expect to enhance that in terms of the return on invested capital by investing the least amount of capital we can to get it up and running and to get the capital back first. And we've shown a willingness to share it with our shareholders before. I think it'll be a fantastic business. Different from Mount Marion, you've got different drivers. So, we had fantastic, it was more demand driven, for lithium. There's obviously a lot of lithium resources in the world, but it's hard to get them into production, right? Whether it's hard rock or brine. We have a look at titanium. It's the demand growth is not off the charts like lithium, but what we've got is, an essential building block for the world economy. It's in the paint, paper and pigment, everyday things that we use. You've got supply dropping off. You've got China twisting half of the world's production to requiring the sort of feedstocks that we have produced, like high purity slags. I don't know. There's no such thing as a wrong rock, Matt, if you can make very, very good margins. If you can dig up stuff, mine it, simple gravity concentration, sell it and make a 45% IRR, you're in a good spot.
Okay, I appreciate the update on this one. But just before you go, you referenced there, obviously, they need to raise capital on the vanadium. How is that project advancing?
Yeah, that's going really, really well. Actually, I think today the European Raw Material Alliance and EIT put us in the top 50 most strategic projects in Europe. Obviously, we're going to produce the world's largest volume of high purity vanadium pentoxide suitable for uses in batteries and chemicals out of an existing steel slag while sequestering carbon. So it's a bit of a unicorn project. The banking's doing well, so in terms of the finance process. So we're confident of having our banking syndicate lined up next quarter, and we've got parties doing due diligence for equity investment in that project.
Okay, well, maybe let's come back to that next quarter when you kind of advance things. But obviously,
absolutely
on the road, pressing the flesh, as it were, and on the recycling side of things as well with Mercedes and the rest.
Yeah, no, look, we're flat out doing the hub engineering cost study. We've done a number of demonstration trials from December through to the end of March. We're very, very happy with how that's going. We look to give an update to the market about that. The Mercedes-Benz frantically working with the guys at Mercedes to tie up all the loose ends there. And essentially, we're just waiting for them and their grant award and issuing us a purchase order. So we're all ready to go. But you can't force your customer's hand. I mean, we are in the business of looking after our customers, and we're up to their whims on when we go. But engineering cost studies going well. We're working with the guys on Stelco for their plant. We're busily building up a very big development pipeline. So, I think the discriminating factor for our recycling business is, to my mind, we're the only recycler that will offer third parties plants. Everyone else wants to do it for their own account. And, we're very, very happy building plants and doing them under different business models. We can provide recycling as a service, joint ventures, or just technology licensing and plant supply.
Okay, and it's going to be important to get this right. And Mercedes are going to demand it of you. Other customers are going to demand it of you in terms of this setup. Do you feel under any pressure, kind of given recent announcements from one of your peers in terms of their ability to actually make the economics work?
Yeah, not really. I mean, I think we've got a completely different approach in terms of that. We're really, really focused on delivering the best project that we can, or the best product that we can. And so, Europe has recycling regulations that the US doesn't have. I think, the biggest challenge that we've addressed is, when we entered into the Mercedes deal last year, the draft of the battery regs had sort of recycling targets of 75 and 85%. And late last year, the European environment ministers, all 27 of them, agreed on 90 and 95%. We knew that was going to come, and so we've been doing lots of process innovation to push our recoveries up. We're confident that we don't have any sort of peers that will be able to offer similar sorts of recoveries in the future. And dealing with Mercedes-Benz, that they demand the best. And dealing with car makers as client, as opposed to building a plant to satisfy your own board, is completely different, So our business is building plants, and we use our exclusive access to that to cut deals, which is completely different from our competitors.
Okay, so the pressure's on to deliver a quality project, and more importantly, economic project. Timing on sort of future announcements on what's going on there?
So look, I mean, 30 June for the engineering cost study, we've said to the market that we want to have that out on it before. And Mercedes-Benz, look, like I said, we're ready to go. It'll just be when they issue us a purchase order.
Okay, interesting. And just one final one, obviously, with the pilot plant for Eli moving forward, what do we need to know?
So that's going to start next month, the purification section up at SGS in Lakefield, and then we'll do the electrolysis test work at a different laboratory.
Okay.
That'll be next quarter.
Next quarter, okay, fine. Well,
all things going well.
All things going well. Exactly right. Chris,
a lot of work, but doing
very well.
It's
everything's kind of coming together at the same time here. Obviously, great news on Barrambie. I think that's really, really positive for shareholders, and the potential of dividends, but everything else coming together quite nicely, and maybe quite a big year for you guys. So appreciate the update.
Yeah, but the team's done a fantastic job
for sure. Well, let's talk soon on all things recycling, and maybe even on the vanadium side as well. Appreciate your time today. Thank you.
No worries, mate. Keep well.